Now, the Morrison government will back single parents to buy their own home with a new initiative set to be outlined in this evening's budget. The Family Home Guarantee will support up to 10,000 single parents to secure a home with a deposit as small as 2%. For more on this and to help explain what this budget will mean for you and your family, I'm joined from Sydney by Managing Director of Accenture, Dr. Andrew Charlton, and also from Sydney by founder of Switzer.com.au, Peter Switzer. Dr. Charlton, to you first. This is one of a number of proposals in the budget to help encourage home ownership. Are these types of initiatives a good idea?
Well, look, it is a terrific idea to be helping single parents into home ownership and other disadvantaged groups. It's certainly a group that struggles often to get into the housing market, and so support for those people is very welcome. I think the problem is when you stand back from all of these measures, you think about the impact that has on the housing market itself. You've got first home buyers with extra cash from the government. You've got people with money to renovate the home. You've got people potentially in the future accessing their super. All of these measures are actually just pushing prices up. So you turn up at an auction in Sydney or Melbourne or Perth or Brisbane, and you've got a lot of people, all of them with government money in their pocket, and that money doesn't necessarily help them buy the house. It just pushes the price up for the benefit of the seller. So we need to be thinking about actions on the supply side to liberate more houses, to create more houses, so that all these measures don't just push prices even further up.
And Andrew, I've got to say, I'm also concerned about the notion of giving people who perhaps aren't equipped to take on a huge debt to buy homes and take on massive debt. If you've only saved 2% deposit, there's a reason why banks shy away from lending to that group. Are we setting people up for failure, people who really can't afford to pay back a massive home loan?
Well, that's precisely the purpose of this scheme. It's to give people support who might otherwise struggle to get that home loan, and to provide some government support to assist them into their first home. And so it's certainly a risk, and it's a risk that the government is sharing with the banks in order to support people into those homes. And it will provide assistance to those people, but it does need to be managed carefully, as you say, because particularly at the level that house prices are today, a lot of that is significant.
Well, I've got to tell you, as a former bank manager, this policy makes me very nervous. And yeah, the government's taking on the risk, but it's you and I, the taxpayer, who's taking on that risk. Now, I want to move on to superannuation. Josh Frydenberg is set to reduce the access age to the so-called super downsizing scheme from 65 to 60 to help older Australians boost their super balances later in life. Peter, explain for my viewers at home what changes in the government policy here, and what does it mean for retirees?
Well, I think the bottom line, Rita, is that now a lot more retirees will consider actually downsizing, and that will actually help a bit of what Andrew was talking about, increasing the supply of a bigger housing. A lot of younger people would love to buy off older Australians who have stayed in their home. Now, the fact that you can actually do it at age 60 rather than 65, it also means that, say, for example, a couple, once they sell this home, they can put $300,000 each into their super fund at age 60 rather than waiting to get to age 65, which means you've got more time to actually build up your super as you get older and older. The longer it takes to get your money into super, the slower your super grows. And at the moment, when you think about alternatives where their money might be outside of super, with term deposits being less than 1%, the best place for people's money who want to actually grow their wealth and their nest egg is in super, where they're averaging at least 6 to 7, even 8 or 9% in the variable super fund. So I think the whole idea is a great idea, particularly when you add in the fact that they're also going to allow people with super to actually keep on contributing even after the age of 67 without a work test. See, the work test knocked a lot of people out who might have downsized and ended up with a surplus amount of money, and now they can get it all in progressively. A couple could get $200,000 a year between the age of 67 and 74. This is a fantastic idea to help people build up their super. And what I love about this, Rita, is one of the stats that came out of all this initiative was 22,000 people have actually used the scheme, which when it came in 2018. 55% of them were women, and 3/4 used the scheme who used the scheme only had $500,000 in their super fund. So to me, it's a really outside the square idea, which really deserves to be applauded.
Absolutely, and if you think it can help you out, go and speak to your financial planner and get some advice, because this could be an opportunity for a lot of our viewers out there. Now, turning to the stock market, while the share market was down today, yesterday the ASX smashed its previous record with the booming commodity prices leading to big gains for miners, including BHP and Rio Tinto. Andrew, what's behind this surge in the iron ore price in particular, and how important is it to Australia's financial position?
Well, look, it's extremely important. And as you said, this week, Australia finally reached the peaks of the pre-pandemic stock market. So that is a big psychological boost for Australia. More than 12 months after the pandemic first hit, we finally back to where the stock market was before the pandemic, which will be a great shot in the arm and boost of confidence for many Australian investors. One of the reasons why the ASX is doing so well, as you said, is a real run in many of the commodity markets, including iron ore prices, which are back above the levels at the peaks of the mining boom. $220, $230, and that is an extraordinary boon for Australia's national income, driven in part by a significant demand for those resources, but also by some supply constraints in other countries, with some of our competitors having challenges with their supply and unable to serve those customers. So, iron ore is a big boost to Australian investors, and we're also going to see tonight that it is a big boost for the budget. A little bit of a get-out-of-jail-free card for Scott Morrison and Josh Frydenberg, who will be banking those extra iron ore taxation dollars and taking them to the budget bottom line.
Absolutely. That's crucial to that bottom line, isn't it? We need those iron ore prices to remain high. Dr. Andrew Charlton, Peter Switzer, thank you both so much for your time this evening.
Pleasure.
Thank you.